Growing up, I really enjoyed watching the Olympics. I wasn't a big TV watcher of sports. I played sports growing up my entire life, but never really spent a lot of time watching sports on TV. And I think it's because my dad was never into sports, or my mom. So I did watch lots of TV, but it was never sports teams. And then as I got older, the Olympics became less and less interesting to me. I think just as it became more and more commercial and more kind of quote unquote pro athletes got into it, it just seemed like just another sporting event. But the one sport or the one event actually that I always and still do today love watching is the relay or the 400-meter relay, where you have a baton and everyone runs 100 meters, then you hand the baton off to the next runner. And I love it for two reasons. One, you have to really perform in those 100 meters, and you better be damn good when you hand off that baton and or grab the baton from the next person. So it adds in this whole level of kind of human error, where if you're just your own and kind of running around a track, not that interesting to me. But I love when batons have to be traded, especially when they kind of slow down on the actual transfer and they show when someone does it and how important that is to winning that event. So there's another baton race that's going on, one that I've been talking about with you for over probably 9 or 10 months, and that's what I want to talk with you about today. Hey everybody, this is RC Peck, and this is my weekend podcast, and the theme for this weekend is the baton pass. Yes, very original, I know, but we're going to talk about this baton pass, and the baton pass is between, I used to say two people, but that one person kind of retired, and so it's a new person, but the baton pass is between the Federal Reserve in the US and the European Central Bank. And it's the baton, using a metaphor, of course, is kind of a money printing thing. Who's going to print the money now? And when we learned back in October of last year that the Fed was going to wind down their money printing, I said at that time, someone's going to have to pick it back up. And Europe's going to start printing money. And of course, they have started printing money. Mario Draghi came out this week and said that he is going to print, and now he's talking about in the billions. He's going to buy up bonds and investments from banks. Of course, they're not going to sell them their best ones. They're going to sell them their worst investments. And he also lowered their already historic low interest rates even lower. So now if you are a bank in Europe and you want to park your money at the European Central Bank, the ECB, you're now going to be charged 20 basis points, which is pretty amazing. That's a negative interest rate that you're going to be charged. Plus, he's going to start buying up, I think the latest number is somewhere around $1.4 billion, and it will go higher. So the baton is getting passed, and you can see right here in this chart of the euro that the euro had been falling before, but clearly it peaked out on the screen. We look at about 2 years here, looking at the euro, peaked out at about 1.37. That'd be $1.37 it would take to buy the euro, and already we're down to about $1.27. You've heard me say before, it'll probably go to 1, find a parity at about 1 to 1, but its next major stop is right around 118 US pennies to the euro, or just 118. That's where it's going to want to go over its near term. Now, as this is happening, Japan is, of course, doubling down on their money printing to devalue their yen. I showed you that price chart last week, but they want to devalue their currency probably another 40, no, not 40, probably another 33%, which, of course, is amazing. So even if the U.S. does not continue printing, we live in a closed system. You can't invest in Mars or Venus or Saturn or Neptune. You are stuck with the currencies and the bond market on this planet. And Europe is a huge bond market. The US is a huge bond market. Japan is a huge bond market. So we're stuck with the currencies and the bond markets we have. Now, the reason I'm bringing this up is because money has to flow somewhere. So I want to show you kind of what's going on right now with where money is flowing. So if you look at the screen, this screen or this price chart compares the US stock market, the S&P 500, with the European stock market, specifically the ticker symbol FEZ. Now, as this line goes higher, that means the S&P 500 is increasing faster than the European overall stock market. And as you can see from kind of the June, July of this year, the S&P 500 has clearly been beating the European stock market. And at the very end, the last couple weeks, you can see the European stock market has started to outperform. When you see this line fall on this specific chart, the line falling means the European stock market is outperforming the US stock market. Now, if we drill in a little bit and say, okay, let's just look at the largest economy in Europe and see how that stock market is comparing against the US stock market, we have a very clear winner so far. Again, when this line goes higher comparing the S&P 500 to the German stock market, that means the S&P 500 is moving faster to the upside. And as you can see, it's been just really absolutely crushing it, actually from the beginning of the year, a little back and forth at the end of the first quarter, but then took off to the upside. And even with Mario Draghi pledging to destroy the euro and print money, the German stock market really hasn't done much. It has not really greatly increased its upward mobility in regards or in relationship to the S&P. And you can see that right now here at the very top of the chart. Yes, the German stock market, when you see this line fall, that means the German stock market's outperforming the US stock market, but it's kind of just going sideways. Now, here's one thing I want you to take away from this chart. Even with Europe printing, that is still going to help the US stock market. Again, money has to flow somewhere and is still flowing to the US stock market and is still flowing to the US bond market. And the US bond market is paying a much higher yield than the German bond market. In fact, the 2-year German bond is negative. So if you give your money to the country of Germany for 2 years, you will get back less principal. They're not giving you anything. That's pretty amazing. Rates have gone negative in Germany and across other parts of Germany with the negative interest rate policy of any banks who want to give their money to the ECB. But if you do want to put money and expose money to Europe thinking, hey, if they're going to print, that market's going to have to go up, what you're going to want to do is hedge against the euro falling. You're going to want to put it in some sort of vehicle that hedges the euro when it falls. Otherwise, you're not going to really get the big hit. So this screen right here actually shows you the US stock market versus a hedged European stock market, and it's hedged for the euro. And as you see here, when the line falls, that means this hedged European index is outperforming the US index. And it's clearly outperforming because this line has absolutely fallen. And again, it looks weird when you see a line falling and then me saying outperform. But when this line falls on this specific price chart, that means this hedged European fund is outperforming the US. Now, this specific actual fund is the Wisdom Tree International Hedged Equity Fund. Man, that just kind of rolls off your out of your mouth, doesn't it? And the ticker symbol is HEDJ. Now, the big takeaway, and the thing I really want you to get, not just what's on the screen, but first, if you're going to buy Europe, then buy it in a hedged manner. Buy that Wisdom Tree fund, and that will give you a better position, and your money will probably outperform an unhedged position probably by about 33%. The other takeaway I just want you to get, and really the point of the week, is the baton has been handed from the Fed to the European Central Bank. Japan is also going to continue to print and destroy their currency. We live in a closed system, so the money has to flow somewhere. That's going to increase our bond market, meaning the price of our bonds are going to go up. The yield is going to go down. There may be one more time you can refinance your house, but we have 1 or 2 more innings left of the market, of the stock market going up before what I think will be a 50% fall. And guys, that's really just another step towards your freedom with money, your future, and your life. Until next time, this is R.C. Peck.